What's
Yeah.
happening in Cardano right now is they are calling Charles Hoskinson out for misusing $600 million way back in 2020, and to the point where the
Really?
the community voted to audit him. So they used like funds
No
to
way.
audit him to see how they actually used the funds on stuff that was voted on, like,
That's
you know,
crazy.
5 years ago. And
Yeah.
the results of those audits are about to come out this week. And he went on this huge rant on YouTube yesterday. Or yesterday? Yeah. About just like how we need to cut out the cancer that's in Cardano, which is this like community of people that are voting to slow things down when everyone that's actually like boots on the ground doing the work is
Yeah.
doing absolutely everything in their power to like make things like work and, innovate and
Interesting.
things like this, but it's for some reason this large group of people within his own community that um are like holding things back. That's like very long story short, but um,
Jesus.
yeah, it's pretty fascinating stuff. Honestly, I'm not sure what they're gonna do about like when you have internal drama like that. I think that's one thing Bitcoin doesn't suffer from is like although technically you could
Teams
vote for
imploding.
future thing,
Yeah.
yeah, there's like no real implosion happening with something as big as Bitcoin. The bigger problems are more like getting governments on board and building legislation and things like that. But when you're an altcoin with that's truly like decentralized or like at least trying to do something with it, because Bitcoin you can't really build on it or anything. They just
No.
use it as like gold.
It's just what it
It
is.
just is what it is, right? But when you this is an interesting phase of crypto where they're like trying to do something with the technology, and one of the first times I've seen at least where they're coming up with this huge roadblock of like what decentralization actually is if you end up, allowing voters to make bullshit
Voters are gonna vote
decisions.
to bomb India.
Yeah, exactly. Like, what do you do, man? Like,
Yeah, that's true,
honestly,
man.
what do you do? Because technically, you would have to like follow through on whatever gets voted on if it's truly decentralized,
Hilarious.
you know? So yeah, that's kind of fascinating.
Voters vote to kill the CEO. Like execute him live.
Yeah. What do you do? Actually, what would Charles do? Like, that's the system he built.
Yep.
With it, because if he like goes against it, then it's no longer decentralized, you know?
Exactly. And then it's
So
worth less. So it's that's a tough little
yeah, and it's a tough
conundrum there.
time too because they're right, like literally weeks away from coming out with their like humongous update. That's gonna like speed up the network like by insane amounts and allow for the option for like uh, if you want your transaction to go like the regular speed and you don't care how fast it goes, then you can just use it as is. But you have options now to uh, allow the transaction to go faster if you're willing to pay a higher gas fee for it. So, I mean, there's like some interesting stuff happening on that blockchain that,
Yep.
yeah. Uh,
Interesting.
I've been rolling
I'm
for the last
ready.
4 minutes, by the way, just because
Oh,
we started
let's
chatting.
go.
I figured I'll just edit it
That's
anyways.
perfect, man.
Yeah. Um, so, I mean, we don't really need to do much of an introduction anymore. Let's just talk about trend
That's
today.
cool, man.
And
Yeah, we'll just get into it.
yeah. Um, so one thing we kind of wanted to touch on today was like from a traditional financial POV, um,
Yeah.
like to kind of bridge into crypto and maybe touch on some of the topics of why trend uh, really has found a lot of success in traditional finance and not
Yes,
just in recent history, but like for
definitely.
decades now.
I can get
So,
into that.
yeah, why don't you kind of kick us off a little bit about the history of trend and why we're here?
Yeah. So traditional finance, so that means really like stocks, bonds, commodities, everything that's really traded globally on much bigger, more liquid markets.
Mm-hmm.
Trend has been a part of and has been traded as a strategy for decades. decades and decades. It I wouldn't say it's lost its effectiveness by any means, but it's definitely weaker in traditional finance now than it was, let's say, 40, 50 years ago when it was, I'd say, a little bit more of an edge.
Mm-hmm.
But one of the big appeals still to the traditional finance trend following strategies
Mm-hmm.
is that it's uncorrelated with everything else. Trend is its own thing. So they usually trade 400, 500 assets, really anything they can get their hands on. So you're talking like it can commodities, oil, corn, cows, like literally everything you can think of that has a futures market. They're trading lumber, orange juice, chocolate, etc. And then they go into this like the equities, and that's mainly like index funds like the SP 500, the Nasdaq, and then you go into like all the bonds and interest rate products too. And their goal is to trade trend on as many products as possible. And over the last, I don't know, 10, 20 years since 2020, since the 2000s, it's performed decently. There's been some periods where it doesn't work in traditional finance for like 5 years, six,
Mm-hmm.
7 years even. And people always wonder, oh, is trend finally dead? And the answer is always no. You know what I mean? There are big periods where um, it really doesn't outperform, right? But there will always be trends in markets. I think
Mm-hmm.
that's something big. I think when the hate on trend is the biggest, when everyone says it's dead, that's really the bottom of like the trend equity curve, and that's when everything will start picking up again. So that's
Yeah.
really interesting because now you go into crypto space, and the assets are more correlated than, let's say, hogs and orange juice futures, right? But they're much more volatile, they move a lot more, and they do trend more, right?
Mm-hmm.
So that's part of the big appeal, moving it over to crypto.
Yeah. I guess one of the first questions then I think people would be interested in is
Yeah.
kind of, I guess this is a two-part question. Like, what are the
Hmm.
metrics traditional trenders, if you want to call them that, looked at when evaluating whether a trend system's like working or not? And then the follow-up question would be like, what are you specifically looking at for key metrics in crypto trend?
Yes.
Yeah.
Yeah. So if you want to like use math or quantifiably prove that trend exists in
Mm-hmm.
your, whatever assets you're looking at, there are a couple different ways to do it. I think the beginner mindset when they're like looking at any testing of any edges or trading strategy is they go right to a back test,
Mm-hmm.
right? They
Mm-hmm.
think, okay, let me slap together a back test and see how it performs, and then I'll optimize it from there.
Yeah.
That is exactly what you shouldn't do because
Mm-hmm.
you end up overfitting every single way possible. Overfitting means like training your strategy on the previous data so it basically memorizes it.
Yeah.
And overfitting can be really tricky. It's even like there's explicit and implicit overfitting,
Mm-hmm.
right? So if you go back like the 2000s and you assume back then, if you're doing a back test, that you would know about a 20 period moving average.
Yeah.
You
Yeah.
know what I mean?
Yeah.
Or
Of
like go
course.
back to 1900 and you do a back test from there. Are you sure you'd actually know about that? You know it now,
Yeah.
right? So there's a lot of tricky shit you can get
Interesting.
yourself wrapped up in. And there's also stuff like when you get into a back test is your actual like order fills, like when you buy the stock or asset or whatever, or when you sell it, those like your actual entry price, um, usually on your back test, it'll be way too good. Because what
Mm-hmm.
happens is on all the bad, on all the losing trades, you will get your entry price, but on the best trades, you won't. You'll miss it. So it's really something to consider. So for a tip for back testing, anything, let's say you have a signal that generates on like April 15th, right? Use the next day's close, so April 16th,
Yeah.
uh, as your entry point. That gives you like 1 day of like missing it. And then you can
Mm.
still measure the effect from like entering 1 day late And if your strategy is actually good, you will still see it be successful. But that's at the end. Back testing is when you've done every other thing in the strategy. The first
Mm-hmm.
thing you should be looking at is for trend, let's say, is this strategy predictive of price? Right?
That's
That's what you're really
fascinating.
looking at. You don't want to know the whole backtest results. You really are essentially looking at, when my signal happens, is that
Mm-hmm.
predictive of price in the future? And then like how much is it predictive of price? So Jonah, if you could pull up that graphic,
Yeah, for sure.
I would love to get into this because this really explains it well. It's from our cross-sectional momentum strategy. I won't get into the specifics of it, but basically, we rank the top 10 crypto assets in terms of how they're performing relative to each other.
Mm-hmm.
So if Bitcoin is up, let's say all the coins are up, right? But Bitcoin is up the most from all the other coins. That's the one we'll buy in the cross-sectional momentum strategy. And let's say Dogecoin went up, but it went up the least. That's the one we'll short sell,
Yeah, that's
right?
interesting.
So we have rankings where if resets every day, but if I think Bitcoin's the strongest, I'll measure the top asset's price and how its returns are, and then also the bottom asset's price and how its returns are going into the future. And what we should see from this kind of thesis is that the top asset we choose performs the strongest, and the weakest asset that we're selling performs the worst.
Oh.
Okay, so if you don't know too much about graphs, it is a little confusing looking at this. Basically, what we're looking at on the x-axis, which runs this way, right?
Mm-hmm.
We we have the signal strength sorted into 10 different buckets. So the one you'd see on the graph is the weakest asset. And then progressively, 2, 3, 4, 5, the asset ranking gets stronger. So I'll repeat what I said again. We're expecting the assets in the lower numbers, like 1 to 5, to perform the worst. And then the strong assets from like 6 to 10 to perform the best. On the left hand side, you see the y axis. This is simply price returns after a certain period. So the furthest graph on the left, this is price returns after 1 day of the signal generation. And
Mm-hmm.
it goes all the way to 30 days after your initial signal. We see that the best assets continue to perform and the weakest assets don't perform as well relative to those. So this kind of is the basis of an edge for a trading strategy. This gives you a glimpse at, yes, this is a viable edge here. This could be a viable edge here,
Mm-hmm.
and then from here you go on and develop your strategy um, based on this. You kind of need this proof of price prediction to continue ahead with developing whatever trading you're going with. If the results were inconclusive, you'd kind of take a step back, maybe change your thesis a bit, and then continue on only after you've kind of validated your ideas.
When we're looking at stuff like this, like how do systematic rules protect investors from emotional mistakes like panic selling or like fear of missing out kind of buying?
Definitely. With automatic systems, we really don't have a say. Like our discretionary view, the system doesn't take that into account.
Mm-hmm. Mm-hmm.
And my favorite example, we've probably harped on about this for the last
Mm-hmm.
couple months, was Ethereum,
Yeah.
right? Ethereum was sorted into one of the top buckets, and it has been for quite a while now. So we've been buying it
Mm-hmm.
quite a lot since, I don't know, I want to say June or July.
Mm-hmm. For
And
sure.
we both don't like the tech. We think, I don't think it's a great product. I have reasons to be bearish on it.
Mm-hmm.
Um, if it was purely up to me and my decisions and it wasn't systematic, I probably wouldn't have bought Ethereum and profited as we did,
Yeah.
right? And
Yeah.
then the same thing like to the downside,
Mm-hmm.
right? Um, Trend system in particular, our trend system, we have profit taking points and like kind of stop losses that go on if price goes down too much after a move down, right? So there's really no reason to panic. In fact, our trend system right now, I think only 11 assets out of 20 have positions in them because the other
Mm-hmm.
nine, um, there's no reason. They're either flat or they're trending downwards.
Yeah.
So we're just not in a position
Mm-hmm.
where, compare that to holding a coin or dollar cost averaging a coin.
Mm-hmm.
You are at whim to those big drawdowns. A coin can go down 80% and
Mm-hmm.
then it can go down another 80% off that. So your
Yeah.
dollar cost averaging means nothing,
Yeah.
especially on those smaller altcoins, right? So we really protect ourselves from the downside by simply, um, having our exit rules in place
Mm-hmm.
and then also being okay with not having a position in some of the markets. If we experience a brutal bear market right now, trend would just not have any positions for a while. We would be completely
Yeah.
100% in cash for the trend system. And that's how we protect ourselves, right? And then when things start turning around again, the system would slowly start scaling in
Mm-hmm.
and, essentially like testing the water with our toes for those first few allocations,
Mm-hmm.
systematically, of course. And then if the trend continued, eventually we'd be fully allocated by the time the big moves come up.
Yeah, that's I, like one video we made recently was to do
Yep.
with like hodling versus the whole like trend idea.
Yeah.
And
Yeah.
I don't know, do you want to touch on the comment that came through? Because I think it's really fascinating. It's kind of on topic of what you're talking about right now.
Definitely. Definitely. So some fellow, genuine question. It's like, why don't we just dollar cost average into Bitcoin, right? Every week, every month, whatever you
Mm-hmm.
can afford. And that strategy has worked. I'm not really trying to diss this strategy. It's a valid, low effort strategy if you believe in Bitcoin,
Mm-hmm.
right? You just accumulate whatever you can. That has worked really well. And I wouldn't say necessarily don't do that, but you have to understand what those risks are. The first one being you're still going to get drawdowns. Just because you're dollar cost averaging in a lower price doesn't mean you're not experiencing a 60% drawdown in a bear market.
Mm-hmm.
You can't, if you sold right now for whatever reason, you'd be taking a big cut in whatever you put in,
Yeah.
right? At Crypto Trend System, we don't like those big drawdowns and we prefer not to take them.
Mm-hmm.
It's really like it comes down to that.
Yeah. Yeah.
Simply like, yes, you can dollar cost average, but first, will you hold that conviction if the coin drops 70%? Not just about Bitcoin, but any. Like, will
Mm-hmm.
you really hold that conviction, or are you going to liquidate and liquidate at the lows?
Yeah.
Or
Yeah.
you have to maintain that conviction,
Mm-hmm.
and your returns aren't guaranteed to be better
Mm-hmm.
necessarily just by dollar cost averaging,
Yeah.
which I think is an important point. Like crypto trend system still outperformed Bitcoin,
Yeah. Yeah. Yeah.
right?
Yeah.
Even if you dollar cost average. Um, So just be aware. Like, I understand the attractiveness of it because it's so simple to do,
Mm-hmm.
right? Crypto trend system also extremely easy
Mm-hmm. Super simple.
to do, right? You just
Yeah.
connect and you're off to the races,
Yeah.
right? Um, but no, it was a genuine question because I think that's like one of the, instead of throwing all your dry powder up front at whatever price, you instead, okay, every
Mm-hmm.
week, every month, I'm going to buy $500 of Bitcoin,
Yeah.
right?
And I will
Um,
comment on that as well. Like having that is a system in of itself, you know?
yes.
It's not some blind gambling. Like I
Hmm.
honestly, this isn't investing advice, but I prefer someone like DCA rather than, try to chase the next hype.
Yeah.
It really is like down to finding a system. Uh,
Hmm.
we both personally agree that like trend system works better and there's data to show that, but I think having a system is always going to be better than having no system in place. And something that you used to talk about a ton actually when way back in the day was
Yeah.
the big keyword in finance, risk management. So, uh,
Yeah,
like
big time, man.
when we're talking about that, like what role does risk management really play in trend systems? Because when you're doing something as simple as DCA, there is still risk management involved. Like that's a whole like game plan to minimize like your decision making risk and to also try to catch everything rather than, you know, accidentally buy everything at the top instead of, you know, spreading it out evenly. So why don't you touch on a
Yeah,
little bit about the role risk management plays in trend systems?
definitely. I just have one more point about the dollar cost
Oh,
averaging
please
because I
do.
think
Yeah,
this is
yeah, yeah.
really relevant.
Yeah.
So, in a more mature market, much more mature, like the S&P 500,
Yeah.
I'm pretty sure, look this up for yourself at home, but dollar cost averaging
Mm-hmm.
historically in the S&P 500 is worse than just throwing your full stack in at once at any point in time in the market. Because with dollar cost averaging, there's still an element of you're trying to time the market. So it's much better to throw your full
Mm.
stack in. I'm not saying that's the same as Bitcoin, right?
Yeah,
Because
yeah,
Bitcoin
yeah,
has
yeah.
performed so well and everything. But maybe as this industry matures, that's
Mm-hmm.
something to think about, and maybe it'll go that way,
That's
right?
fascinating. Yeah.
Yes, yes. So you may seem like this is a big part of risk management, is like psychologically, it's definitely easier to distribute your purchases
Mm-hmm.
of an asset, whatever you want to invest in,
Mm-hmm.
over like a time period of, let's say, 12 months. I'm going to buy this much every month, right?
Yeah.
But that doesn't necessarily mean it's going to perform better. You're going to feel better about it. You're going to
Right.
feel psychologically safer, but that
Right.
doesn't mean you'll get your best return.
Yeah, that's interesting, huh? Like so
Yeah.
much of investing is just like how are you feeling
Yeah.
about it rather than
Yeah.
really
Yeah. Yeah.
looking at
Yeah.
the data at hand.
Yep. And if you're not relying on the systematic system and you're really discretionary about it,
Mm-hmm.
that's when emotions can come into play and really screw you over.
Mm.
So going on to more risk management for the crypto trend system, one of the biggest I one of the biggest things that keeps us in line is a targeted annualized volatility.
Okay.
So volatility means essentially how much an asset moves. If it moves a lot up or down, it's high volatility. If it really stays flat, it's low volatility. So one thing we do is, let's say we're trading those, we have positions in those high volatility coins like Doge or Pepe, or even like ADA has something like a 70-80% volatility right now, or it did
Mm-hmm.
recently.
For sure.
That's extremely volatile. To give you like a reference point, the S&P 500 trades about an 18% volatility, and the Nasdaq trades at about a 23%. So
Wow.
whatever the expected returns are of the, like, say the S&P 500, it can be the first standard deviation move is within plus minus 15% over a year. So those, you know, 20%, 23% volatility, that's kind of high.
Mm-hmm.
And these crypto assets, they can be 10 times that.
Yeah.
No
True.
problem, especially in those big, like those big days that do
True.
occur where they're all volatile.
Mm-hmm.
So what we do is we scale our positions down on the singular asset level and then the portfolio level to target a certain volatility. A crypto trend system, that's about 30%, give or take, maybe a little less, maybe like 27, 28. And this really controls the big drawdowns that you can see in the system, because if let's say Pepe goes down like 80% and for some reason we're long, which we'd never be for that long, the total amount of our allocation is a lot smaller because we adjusted for that volatility,
Right,
right?
right, right,
So it
right.
removes some upside for sure, but the upside's already so big in crypto, it doesn't matter,
That's
right?
true.
So that's how we protect our asses.
Mm-hmm.
And with trend, with the targeted volatility, it is almost impossible to blow up because of that. You have a whole bunch of different assets,
Mm-hmm.
right? You almost never in full position sizes, and when you are, you're greatly in profit. So
Yeah.
trend by itself, any single trend system, like anyone's trend system, it's one of the hardest strategies to actually blow up
Mm-hmm.
because of kind of the nature of it.
Yeah, and it's like a very much so an ease of mind thing as well. Like one of the follow-up questions I was gonna write down here was like what does the life of a trend investor look like compared to a traditional investor, or sorry, trader?
Yeah, yeah. So, trader's pretty a broad category, but
Absolutely.
that could really mean anyone taking like intraday positions or like stock picking,
Mm-hmm.
right? I would like to like reframe that question from like a systematic trend trader
Mm-hmm.
versus like a non-systematic, maybe discretionary investor,
Yeah, sure.
right? So, for on the investor side, you're looking at stocks, you're looking at news, and you have theses.
Mm-hmm.
I think this stock's going to go up because X, Y, Z. So
Mm-hmm.
I'm going to buy here. And, in this time frame, I think I'm right. So you have like an entry, an exit plan, and a thesis behind it,
Mm-hmm.
right? And that's all like a system isn't deciding that, you're deciding that, right? And you
True.
can go that in a shorter time frame too. If you're like a day trader, on a very small time frame, you're still doing, I think it's going to go up because X, Y, Z, and I'm wrong here. Or um, I think I'm even more right here, so I'll add some more position to it, etc. So you have entry, exit, and like a thesis behind it. And this is all based off of, it could be loose rules you're following, or it really just you really could be going off vibes
Yeah,
too,
true.
right?
Yeah, yeah.
Um, and that it works for some people. Don't get me wrong. A lot of people do that and they make money, they outperform, but I'd say 99% they end up underperforming for various reasons. One being first, they don't have an actual edge. They're going off, vibes or guesses,
Mm-hmm.
right? Um, that's number one. And number two would be, their emotions get at play
Mm-hmm.
and it turns more into gambling where, you maybe take a loss. And so on your next position you take, you
Mm-hmm.
double up, you size up to make back for that loss,
Yeah,
right? You
yeah,
kind of
yeah.
martingale it. And then, that can work for some time, but the odds are you'll blow up.
Yeah.
Versus the
I'm guilty
systematic
of
one.
that, yeah.
Oh, yeah. No, me
I've
too.
been
I've
guilty of that, yeah, for sure.
Yep, yep. No, you take like a couple $100 loss and you're like, fuck that. Your ego gets involved. It's the monkey brain, right? And because you also don't have an edge, right?
Yeah,
It just creates a ton of volatile emotions,
yeah,
right? And the systematic trader, my brain's turned off, man.
yeah.
For the actual trading, it makes all the decisions for me.
Mm-hmm.
And I trust my research and analysis I've done previously.
Yeah.
So if it says, we're buying ETH today and
Mm-hmm.
it goes and buys ETH, like I don't have to click a button to do that.
Yeah.
I just know it's going to outperform, even if, I see 10 days of, no gains, which is happens a lot in trend, right?
For
I'm
sure.
still trusting the system because all the research and math that I've done proves that, it works and it will continue to work.
Yeah. I want to touch a little bit on that because my personal story behind like having a thesis, but I'm doing the investing myself. I'm not really
Yeah.
necessarily following a system. It's just I did hours and hours of research and I just think like, oh, this is what should happen. And it's just a conviction in my own opinion. It's not necessarily backed by something like what we have with math,
Yeah.
with trend systems. So uh, when AI coins were first kind of hitting the market, huge upside potential there. It was, I was seeing some major projects backed by just like insane competition in comparison to what we've traditionally been seeing with altcoins, right? It seemed like it was almost the next generation of crypto at the time. This is maybe
Yes.
about 2
Yes.
years ago. Uh, Huge investments were going in. They're hiring insane amount of talent, and I just felt that okay, I should put some of my allocation towards, uh, towards AI coins, and
Yes.
did a bunch of research. GRT is the one I ended up landing on, the graph. They essentially are
Oh, yeah.
built on ETH, and they seem to have like a brilliant team there. And I loved the technology and I loved the vision that they were trying to do. However, there was no math behind what I was trying to do. It was just simply I was making my decision based on these guys look really smart. They come off as really professional. I read their white paper, like brilliant
Hmm.
stuff they're talking about. I'm investing in
Yep.
them because I believe in what they believe. And that was
Yep.
it, you know?
Yep.
And
Yep. Yep.
I mean, you can talk in a bit here and I can pull it up on my phone. I was so wrong. I caught the top. I lost like a good maybe $700 on that. And instead of uh, kind of just like bailing out or, finding some sort of exit strategy for it, I doubled down on my conviction and I bought the bottom again, or what I thought was the bottom. And what ended up happening was it has never gone back even remotely close to the second time I
Tough.
bought it.
Tough.
So
Tough.
now,
Tough.
so that's me like doubling
Yeah.
down on an opinion rather than
Yep.
necessarily like a systematic strategy and
Yep.
really getting burned by it. And I'm so deep in it. I'm not so deep. Like it's a small allocation of my portfolio, but
Yeah.
I made such a rookie mistake there that I have yet to sell it. I'm just holding it and praying that there might come a day where they turn things around. But now I'm completely at the mercy of the developers and the team over at GRT. And it's not a good feeling. Like when you have your money
Interesting.
in Trend System, all those opinions, all those emotional decisions, what may not
Yep.
even feel like emotional decisions at the time, quote unquote logical decisions, completely out the window. You don't have to do any guesswork, and it just does the work for you.
Big
And
time.
yeah,
I like to. It's really interesting. Sometimes it is the correct thing to double down.
yeah,
You
yeah,
know,
yeah, yeah.
sometimes that is the right thing to do,
Oh, I've had
right?
it work before. Yeah, for sure.
Exactly, exactly.
Yeah.
You get a winner and you add into it and like this
Mhm.
is it. And
Mhm.
that's your moonshot kind of
Yeah.
trade, right? Definitely that's the hard part when you're not systematic about it though, because
Yeah.
you have so much, I've said this before, you have so much rope to hang yourself with.
Yeah.
You need to be extremely disciplined,
Yeah.
right?
Yeah.
Because you can make so many different mistakes
Mhm.
because you have way too many options.
Yeah.
So introducing a systematic framework cuts that down completely, and you can't make those mistakes. You literally can't.
Yeah. It's not even an option. Like,
Exactly.
yeah.
Exactly. And with trend, the edge is so like it's such a proven edge, and it's such a strong one
Mhm.
for in crypto relative traditional finance. Right? There are lots of
Mhm.
different other edges in crypto that are probably a lot stronger,
Mhm.
but in terms of one that works on very big liquid coins and it's like a low frequency
Mhm.
where you're only trading at most like once a day.
Yeah.
It's such an unreal strategy.
I couldn't agree more. And I'm just pulling up my unfortunate GRT disaster here,
Oh yeah.
so you guys can see it. But like here, this is uh, this is the graph. The graph is what it's called. It's kind of flipped backwards for you guys, so you can see it there.
Yeah.
That's
That's the classic, hey? Yeah.
so up here is almost exactly where I bought, a year ago, somewhere in this range, and we are down. Uh, Well, it's kind of recovered slightly, but you can see here like it's down a good
Yep, yep,
50%,
yep.
And I'm completely at the mercy of, if you look at the price action here, of it just being like choppy flat for the last half year, all because of some false conviction in AI coins. And I was bought into I drank the Kool-Aid and bought into the hype. Yeah.
Happens, man. It happens. For
Yeah,
sure.
for sure. Yeah. Who knows? Maybe
Definitely.
that is the winner one day. But again, as you just said, you know, taking those
Oh, that's the
decisions
thing.
out
You
of your
could be
control.
absolutely right,
Yeah.
but then it's like, do you have like imagine in 5 years, okay, it does the 1000x.
Mm-hmm. Mm-hmm.
All that pain and sitting through
Yep.
it.
Yep.
Oh, but like you finally gave up 4.5 years at later. So you're 6 months, like, you know what I mean? Because that's
Yeah.
what happens. I'm not kidding. When you
Yeah. Yeah.
finally
Yeah.
capitulate like that,
Mm-hmm.
that's when it'll go. And that
Mm-hmm.
happens to literally everybody.
Yeah.
Um, what's his name? Druckenmiller? Really big, one of the best traders,
Okay.
hedge fund managers ever to exist.
Mm-hmm.
2000 bubble, right?
Yeah.
He knows it's gonna go down.
Okay.
He knows like he's so short,
Mm-hmm.
right? and he capitulates. He's like, "Fuck it, I'll buy."
Yeah.
Right? He gives up. Right? Not 1 month later, everything collapsed.
Oh,
Everything collapsed. He lost so much money, and he's one of the best to ever do it.
yeah.
Right?
Yeah.
So that happens to him, and I'm gonna find his quote right now. He's like, "Did you learn anything from that?" And he said, "No, I already knew I shouldn't do that. Like there was nothing to fucking learn. I already knew I shouldn't have been doing that." It was, I'm
Yeah.
paraphrasing, but it was along the lines of that. So it
Yeah.
happens to anybody,
Yeah.
and some of these costly mistakes
Mm-hmm.
you already knew.
Yeah. Absolutely. Yeah. Yeah. I mean, it was a rushed decision as well, and that's what feels bad about it, you know?
Yeah,
And now suffer the test of time of seeing how long and how disciplined can I be to just not deposit everything that's in there right now and take a 50% loss. I'm just kind
yeah,
of truly at the mercy of, this coin. Like, not, it's, again, a very small part of my portfolio, but Oz, a beautiful little cat making a guest appearance. And yeah,
I'll let
that's just
her
how she goes.
ramble away. Yep.
So I think like a good bridge into this is, hopefully many of our listeners are busy professionals to some degree. They're not just sitting on their ass watching crypto videos all day, but are trying to do something with their lives. And I'm wondering, like, from your perspective, how does a systematic approach free them from needing to do all the things that we just talked about? Just to kind of conclude it all.
Yeah, yeah. I mean, you turn your brain off essentially because you've done all the homework. Like for me, I've done all the research, the analysis,
Mm-hmm.
and now I have the full trust in the system. So I could go away, go to the beach for a month, come back, and it's fully traded for me. I don't have to worry about it
Yeah.
in the slightest,
Yeah.
right? So all those fears that come from the non-systematic approach where maybe you have a thesis, maybe you're gambling, whatever,
Mm-hmm.
right? Those literally don't exist. It's
Yeah.
just a trust in the system and that faith, and that brings an amazing sense of comfort.
Mm-hmm. I
I
couldn't
actually
agree
like
more.
to
Yeah.
show one more thing. It's another
Please do.
example of a very easy trend system if you'd like to do it on your own. You can
Mm-hmm.
do this in Excel if you really want.
Sure.
What we're looking at here is the daily chart of Ethereum. And then there's two moving averages on here. They're exponential moving averages,
Mm-hmm.
which means it takes the weight more of the more recent days than the previous days. But the lengths for these, I believe, are 16 for the white one and 64 for the blue one,
Mm-hmm.
right? And this isn't my strategy. I did not coin this by any means. If you want to look into more, look up Robert Carver and all his books. He goes into great detail about why this works and how to implement it for traditional finance,
Mm-hmm.
right? But for a basic trend system, just using these two, how you would kind of do it. Um, First, there's two ways. Either you can have like a binary trend system where you're either all the way long or like all the way short or nothing,
Mm-hmm.
right? So you're either like fully in the position or you're not. And the other way is much more of a continuous signal
Yeah.
where it's kind of you get a score essentially, and the most long you are is like the highest score, and the most short you are is the lowest score, and then that changes every day. So
Mm-hmm.
how would you get a score with these two? You would simply measure the distance between the fast moving average, which is the 16,
Mm-hmm.
and the slow moving average, which is the 64, right? So, for example, if we go, within this last year here, the distance between the moving average, the white one and the blue one, was pretty big here. So you would be short this whole move down, right? The distance
Mm-hmm.
pretty big, but it's maintaining. And then all of a sudden it flips up here. And then
Right.
you'd start slowly scaling into a long position, right, based off the distance. And then you'd probably be taking some profit here, but you'd still be a little long because the white is still above the blue.
Mm-hmm.
and then it would just take off. So you would have caught this whole move to the upside on Ethereum,
Yep.
and you would still be long. And then
Mm-hmm.
as this kind of, let's say this continues to go sideways here, you would be gradually taking profit as the 64-day got caught up. And if we started going down, you would maybe be beginning to get into a short position. So this doesn't work great on just one asset. You'd probably want it to run on, I'd say, minimum 20,
Mm-hmm.
right? But this is a trend strategy you could do at home or kind of use this as a base and develop from here, right? How does this look if you're using like 5 different combinations of moving averages, not just this one, and then you aggregate them into a score and you go from there. And you can do the tests that I showed you with like the median log returns. You can measure the signals, like the strongest signal you get from this trend system. It should be showing the biggest price moves in the future, and the biggest short signal should be showing yes, price tends to continue to go down when the distance between the fast moving average and the slow moving average is big.
That's
So that's just
brilliant.
a quick and dirty system if you want to do it yourself and you don't want crypto trend system. You have the time
Mm-hmm.
um, to do it. You can run this system in Excel if you want rebalance daily.
Yeah. I think it's so brilliant because just to go back to one of the first topics we talked about today, which was the whole like backtesting idea, right? Like this
Yep.
is so different to just reading what happened in previous history and then making decision off that because you can see the indicators of like where are we now according to what has happened. And I think that's such a big difference to people that come to conclusions like I have in the past just on like assuming history is going to completely repeat itself you know, because that's
Exactly.
exactly what happened before. Yeah.
Yeah,
And
no, it
yeah.
never works like that.
No, it
Sometimes it
doesn't.
rhymes, but never repeats.
Yeah,
Yeah,
yeah, yeah.
yeah,
No,
big
that's
time, man.
brilliant. That was thank you for showing me that. That's the first time I've
Definitely.
seen it as well, and I feel like I have a better understanding of it now, thanks to your
Oh, perfect.
explanation there. Yeah. Um,
Wonderful.
so I guess we should be wrapping it up pretty soon. So one of the questions I really wanted to ask the whole podcast was, do you see systematic strategies like trend system becoming mainstream in crypto one day? Because right now it's very much so a proven strategy, but it's not necessarily a mainstream one. So yeah,
100%. I think we're just early by 3 to 5 years.
yeah, I agree. Yeah.
I think you'll eventually see some kind of products like tokens or ETFs
Mm-hmm.
that kind of do these strategies and they'll be accessible for retail traders,
Mm-hmm.
right? I think we're just extremely early on this, but you give the industry a little more time to mature, maybe there's a little less risk in it, exchange risk, etc. It becomes easier to onboard, whatever,
Mm-hmm.
right? But eventually everyone will be running these strategies. Not
Yeah.
everybody, but a lot of people, and it'll be more well known and it'll be, unfortunately,
Mm-hmm.
less of an edge. But that
Yeah.
doesn't mean the edge won't be there, and that
Mm-hmm.
doesn't mean you can do things to find an edge from these.
Yeah.
Like ways to improve it. We've recently improved the cross-sectional momentum
Mm-hmm.
using relative volume and correlations. Um, drastically improve the strategy. Right? There
Yeah.
will always be kind of new ways to increase your capacity or like continue to develop your edge.
Yeah, yeah, for sure. It's not just like Bitcoin where you make it once and then you never make a single update for the rest of its existence.
Exactly. Exactly. And a lot of people have that opinion about Bitcoin where like, shit, it's already up like
Yeah.
$115,000.
Hmm.
Like if I put a grand in and it goes up to 230, I have
Yeah.
2 grand. Like I'm not rich.
No, not at all.
Exactly,
Yeah. Yeah.
But
Like,
trend,
yeah, good for you.
it's different.
Yeah, absolutely.
Yeah.
Um, yeah, I mean, I think that's pretty much all I wanted to cover today. I think
Wonderful.
one thing that I'm very much so taking away from this, and I'm gonna do my own research after this, is as you were talking there, I'm wondering what the pathway was in traditional hedge funds and in traditional finance for trend. Like, did that also must have been way back in the day, not necessarily a mainstream strategy, but then was caught on, as
Yes.
time progressed. And I'm curious now, just because I'm in love with this industry, in love with the scene, like where are we in correlation to the timeline that we've seen in the past?
We're
Um,
so early. We're
I really
so
believe we're
early.
super, super early, and I think we'll see a lot of similarities looking back at,
Yeah.
various
Yeah.
different trend strategies in the past on that timeline. So,
I
uh,
think so.
yeah. So thank you, Quinn. Appreciate your time today,
Thank you.
and I hope the viewers got an interesting listen out of this. We'll see you next
Wonderful.
time.